First of all, stock of the day that I chose for the two fellas today, coal miner New Hope Corporation will buy $300 million worth of shares back within the next 12 months, following on what Whitehaven has done. New Hope says the board has approved the share buyback after taking into account future expected operating cash flow requirements. The buyback will commence November 17, likely to be completed within 12 months, subject to prevailing share price and market conditions. It follows full year revenue lifting 143%, $2.6 billion. Net profit soaring after tax to $983 million. Let's see how the stock's performing today. One of the few stocks that is actually up at this stage. Mathan, number one, what do you think of the buyback? Because Whitehaven has been criticised for its buyback at these elevated levels. Why not buy back at lower levels? Their counter is it's capital management, give it back to shareholders rather than invest in something different and take the chance of that. And the stock price at the moment, what do you reckon?
Yeah, look, we've talked about coal before. Give credit to Gaurav when he's not here, so let's do that. So he picked it early. It's an energy thematic. You are picking on everything in energy is doing well, and coal was one of the best performers, and you're seeing a bit of a pullback in that, and the others are recovering. So I think the thematic still holds, and coal's been doing well on the back of that. And I think it makes sense. I don't think anybody's going to be surprised by that. It was expected, and the whole talk about why won't you wait till things collapse? So the reality is, when share price is really cheap, management is getting hit on the fact that it's cheap. Why don't you do something about it? And so when it's expensive, don't do buybacks. When it's cheap, they would want people to spend money and try and redo the business. So in reality, no matter when they do buybacks, they're always going to be questioned on it. So I don't think that matters too much. Now, all they're doing is they're increasing the share count, makes the growth outlook for the next year a bit easier. They're churning out cash. They're like better than the banks at the moment. And you make hay while the sun shines. And right now, the energy sector is doing as well as they've done for a long time. So I don't have a problem with it. But look, if you're holding it, great. I think it's still doing well, still churning out cash, and the buyback will support the share price. But if you've got fresh money, I think you're coming late to the game in coal, but there are other energy sectors still looking quite interesting. I think in the speculative end, you've got uranium. I think the oil price starting to climb. OPEC is looking at demand and saying they might have to move again on cutting supply. There's geopolitics playing out on the supply side. So oil price is looking strong, and I think it'll recover, and that'll play well for the whole energy sector. Yeah. I don't think that's great for the economy, but overall for the sector as an investment thematic, holds up quite well.
Philip, what do you think? Firstly, of the buyback, even Mathan, for a number of times, says the problem with big resource stocks is when they're making too much money, they go and buy something and bugger it all up because they usually pay too much. Here's a resource stock that is saying, no, we're not going to muck around with the business. We're going to give it back to you as shareholders.
I think that makes sense, and I think it's a buy.
Right.
So coal companies are doing very well at the moment. The met coal price was $50 US a tonne a few years ago, about $350 a tonne today, having come off $450 a tonne highs, double on PCP. New Hope made about $1 billion in free cash flow last year. In different times, they would invest that in new mines and trying to expand coal production. You can't do that at the moment. No. It's politically incorrect. So what are they doing? They're giving it back to shareholders. So that's 20% of its market cap in free cash flow that they paid a special divvy with the full year, and they're doing a share buyback. I think they said in the release they think it's cheap, but with all this cash, rather than sitting there earning zero or next to zero, they can't reinvest it. Give it back to shareholders. If you've got franking credits, pay the special dividend. If you don't, do a share buyback.
And the other thing they could do is, let's diversify out of coal. Well, that's fraught with danger, isn't it?
Investors can do that better than they can. So look, it makes absolute sense. Why I think it's a buy. As Mathan said, the buyback will support the share price. They're probably going to have another strong year next year. If coal prices stay anywhere near where they are, even if they come off a bit, there's still several hundred millions of dollars in free cash flow. You might get another one next year or another special divvy. So it's stronger for longer, I think.
Okay, so you don't reckon we've missed the boat on this?
No,
for investors to get in with new money?
not at the moment.
Okay.
No.
All right.